and thank you for welcoming me today. So I'm working for RMS, which is also a global model provider, but I'm, as Daniela said, mostly responsible for the European part and also the Asia part now as well. But here I would like basically only to focus on Europe in the few examples I will show, and take the opportunity to share with you some of the RMS view we have around new technology, how this new technology could enable us to better understand the risk and unlocking new opportunity for your business, but also maintain and even add more relevance to the insurance business for the society actually. In terms of introduction, I would like to ask you a question: if you felt over the past two days really safe in that building in terms of wind and flood risk? And I think everybody has his own opinion. It's subjective, but if you want a quantitative opinion about what's the risk for that building, you have to use a model. So I'm a modeler. I put that building into my model for wind and loss, and I computed a bit the loss metric. So I apologize for entity data. It's a rough estimation about what this building is. Probably it's better built and so on. But it's just illustrate a bit the type of output a CAT model is giving you. This is this exceedance probability curve. We call it an EP curve, and it gives you basically at a certain return period. Let's put at 200 years. What is the expectation to exceed a certain loss threshold, right? And you see here, this is expressed as a loss cost for flood. It's about 0.12%. It's twice for wind, so it's not that high actually. But it's interesting to monitor that and to take two elements out of that. The first is that if you want a quantitative assessment of your risk, you need a model, right? Because otherwise everything is just subjective. And you could think also as a model, they need to be very advanced in the sense that if you take the flood curve here, the flood risk for that building is not coming from river flood, right? The ISAR is 2.6 kilometers away. All that is coming from pluvial precipitation, flash flooding that could really occur there as everywhere, as we're experiencing over the past few weeks. And this is mostly what is driving the tail risk, as we call it here in that EP curve. So complex models have been used by the industry for many years, but despite the fact, as you know, there is what we call the insurance gap. And the insurance gap is not only valid for the emerging market, it's also happening here in Europe, even in very well-developed markets like Germany. If you study the recent event in terms of flood risk, 2002, 2013, the insurance penetration was about 25%, right? It's a bit higher for wind. So a part of the explanation, as we discussed, is really coming from the fact that we may have insurance structures that are in place. For example, the bundling of different policies could encourage, of course, the insurance penetration. This is probably a part of the explanation for why we have a higher wind coverage in Germany, let's say. But also, over the past few years, when I interacted with most of my clients, they say, well, it's not only the only story. It's also the fact that we miss some tools. And they say, well, to manage flood, we have tools, right? We have models. Yeah, but your models are not really, I mean, we don't trust really in the model. This is exactly a topic that was our trust yesterday, actually. And I could feel, okay, this is basically, flood risk, basically in Europe, is considered almost like a large non-modeled tier 1 risk. And this is a problem. And this is a problem to have this gap, especially as this gap as well is evolving in time. It's not something static. If you take the example of climate change, we mentioned that. I've taken large concentration of exposure, like in London, mega city in the UK. The Thames Barrier were built late 80s, right, 72, something like that. So in the 80s, they were basically closed 4 times to protect against tidal flood, but also pluvial precipitation from inland. Now, since 2000, they were closed 100 times. And after some point, you never can sustain that. They were closed almost for every tide. So that's really a problem. And you have to deal. The gap could grow and increase. And the gap is also sometimes outside our traditional business, but still affecting us. I take here the examples of marine risk, which is another one. Many property books, they also have a marine component, a cargo species, and it's growing massively. Today, I think it's 10 trillion of US dollar traded annually. By definition, almost all of that is insured or trying to be insured. And it's twice the GDP of Japan, right? It's pretty massive. And you see on one ship in the 60s, you may be able to put 700 containers. Now we have ships with 20,000 containers. So the concentration of exposure is growing. And you may have books of property and marine in your business. And especially the problem is that that kind of risk is affected by the same catastrophe as property, storm surge, Sandy, for example, or that kind of risk. So that's another thing to keep in mind. And the last point I would like to highlight here in this presentation is about the fact that we are talking about more data, more models, more digitalization. All of that includes actually that we are moving to high technology, computing and so on. So we are affected, as we already discussed a bit, by the cyber risk. It's clear that we may have data breaches, we may have cloud service failure, that kind of issues, right? And we need to manage that. It's a part of the property, managing your own risk, even if you're just writing property at some points. And you see the gap in natural catastrophe is about 30% worldwide, right? Is only insured, right? 70% gap. Now, if you look about the total toll estimated for cyber risk is 400 billion. And almost hardly of that is really insured. That's a real problem. So again, I would like maybe not to go a bit deeper about just illustrating briefly how RMS is taking that kind of topics there into play, starting with how new technology can basically empower you with better managing that risk. And I would like really to start the fact that new technology can have really new values in terms of first delivering more complex and more accurate model. It's something I already mentioned yesterday at the panel discussion. I just want to illustrate here, based on our own experience about modeling flood for Europe. Flood is probably the most difficult peril to model because it's very high resolution. And if you look at the RMS model today, we model, well, just a few years ago already, we had these 3 countries modeled in Europe. For maybe 8,000 stochastic event sets, so I think it was not a massive event set. So again, maybe uncertainty in the tail, high severity, low frequency events. The resolution were, well, 50 meter, 1 kilometer, because we have to aggregate the hazard. We cannot run a massive model. And especially those models, they were produced like national-wide. You have a model for Germany, for Belgium, for the UK. So if you want to cover your entire Europe view, you have to license for different models. You have to maybe get the input from some brokers and so on. And none of that is connected. Or we know the flood is not stopping at political border, right? When it's raining in Czech Republic, in Prague, very often it's also flooded in Dresden. So that's the point. So we need to have some kind of a more massive solution, more important. So now, with more power, more computing power, we are able to deliver that. And this is the fact that now moving to the cloud, moving to more powerful solution enable us to no longer restrict our modeling capabilities. So we have this year, for example, released now this pan-European model. So it's a model that has no longer any border. It's one single event set. And this is really inducing, well, as you see, the massive event set, it's 805,000 events, right? For a large amount of simulation, 50,000 years, so we can simulate also a lot of those events. And the resolution, as you see, is down to a few meters now. And because we can create a model with billions of cells. We can compute that, which was not possible 10 years ago. So, and this is really something that induces a complete and consistent view through all the countries, and as well, you can preserve the high resolution elements of that, which is important for flood. You can see that you need to have this power of computation for not only to provide high resolution modeling, but also to be able to interact with the model while running. For example, you need to test some sensitive assumptions like flood defenses. So at the bottom of the slide, you see here Dresden view for defended and undefended. Massive difference, of course, but you need to understand what is the sensitivity impact there. And if you need to run that on the flight while running the model, you need to have the computing power inside. And this kind of product is not only has not only a marginal effect on your business. It's just the fact that we can model a continental scale event set now because of this computing power and the fact that we can model thousands of years of simulation of precipitation. We really model actually the full story of the water from the cloud down to the basement of the building. And this is inducing cross-country correlation that we never had before. For example, this map's showing the correlation between London and the rest of Europe. And you see there's a high correlation between London and north of France. It's not really correlated with Poland. It's different atmospheric pattern. It doesn't mean that we found a secret river under the channel linking France and the UK. It's just because it's linked because of the precipitation pattern. It's very important to understand you need to actually start with precipitation. And the correlation is important. I just put one number, 20%. If you run, let's say, a model for Germany and a model for Czech Republic, in isolation, you group the results. At 200 years, you are 20% lower than if you include correlation. So it's a massive impact on your loss in the end, right? You need to consider that. Another one is about the fact that we model all type of risk, of flood risk. And in this case, you see about 30 or 50% of the losses are coming from the off-floodplain, as we call it, flash flood precipitation. Again, a high risk of basically having an issue there. And the time-dependent policy conditions, again, the fact that we model thousands of years of simulation, you can group these different elements together, and you can create you can represent exactly how the hours clause is operating in your 3D, and you see the impact again is pretty important to create your own view of risk. Okay. I just would like to mention about flood. One other use of technology is about the fact how we can create real-time reproduction of event. You know, after a big event, the interest industry is expecting to receive a view about that event. They can run on their book and assess pretty quickly, a few days after the event, the impact on their book. And so here, just a mixture of different technology we are trying now to test at RMS. Satellite data is a traditional way to see the extent of flooding, but the problem is that you don't have always satellite data in enough quantity. Maybe you have one or two paths of a satellite over one event. And very often when it's raining, it's cloudy. So satellite data is a limited use very often. That's the case for the past few weeks, even actually in Europe. So we try to complement that. We discussed about drone. It's something we are investigating. But we also tested actually social network, actually. We made a paper on that recently. After an event, like this morning in the UK, I think, we noticed after one day, you have a very active social network posting, both on Twitter, on Instagram, and it's a very valuable tool because all of that post, they are geotagged, right? So you can use them actually, and we noticed that both in space, they are representing the footprint of the event, and both in time, they show what's happening. So after maybe one day after the flood started, we may have 10,000 posts per hour. And then, of course, that's a big data problem. You need to filter out that to end up maybe with 1,000 useful information per day, but that's still something you can use, and you can complement with your reconnaissance. You can go in the field and see if this information makes sense. And in the end, you can reproduce your model in your hydrological modeling as we did in the past. So that's really another use, actually, of CAT mod, of this kind of new technology we can see for the insurance industry. So briefly to the last two topics about cargo modeling, I just want to mention it's important to understand that we should not think about property modeling in isolation. We should really see this topic as broader because we can be affected by other type of business. And usually for cargo modeling, you've seen it's a pretty important business. And what people are doing, they just code their exposure in the middle of the port as a content. So they neglect if this is stored in a in a building or a different type of device, right? And this is, of course, as important. So this leads very often to have an underestimation, or an overestimation of the risk, and thus this is really killing deals in terms of cargo modeling. And this is, of course, a problem. So now, with the new technology, satellite imagery, for example, we are able to exactly reproduce what the ports look like, what kind of storage in time, right? Because there is a seasonality in that. And it's also crossing new types of data. It's not only coming from the insurance industry, this can come as well from different sources, like museum curators for spaces, and so on. So we need this kind of integration of all data in one model with high resolution to deliver that value. And again, this is not marginal, right? You see a bit the impact there. It's a log scale. It's for the port of Port New Jersey and Port Elizabeth there. If you have automobiles, if you have consumable goods, it's really different because it's stored a different way, and also the content are different. So you need that kind of granularity. You cannot work with aggregated information. And the final element is about cyber risk, and I don't want to expand too much on that because I'm not really the expert there, but it's just to mention that this is affecting all of us increasingly, and I think all model vendors, they are trying to deal with that now because we try to apply what we learned about catastrophic property modeling to now new field like cyber risk. And it's interesting to see when I ask some of the clients what is their concern in terms of cyber risk. They, of course, want to know what is the big, how big is the event, what kind of exposure they have, the silent exposure problem, but especially they are pursued with very, very basic questions. For example, what are the different data standards? How can I code my exposure in the end? They don't know because it's pretty new. So one of the basic elements I did here, I want to show here, is just that we started basically with the basics. We tried to integrate information from the industry and from the Cambridge. We work with the industry with the. Oh, sorry. I need to drink. I have a sore throat, so sorry, my voice is a bit breaking now. So we work actually in collaboration with the academia for that perspective to develop new standard how to code the cyber risk. And this is an interesting way to do that because we need to develop something that is peril agnostic, model agnostic, that is really representing a complete view about the kind of exposure you may have. And once you have that, of course, this is helping with the transactional aspect of cyber risk. And now, at this stage, we have different scenarios modeled. It's an evolution, right? It's a model that we plan to evolve in the future. And this is exactly, what I would like to show here. I think I need to stop, sorry for that, because my voice is really breaking. But I would like just to highlight one element here is about the fact that it's a really growing business, right? Everybody is really concerned with that, so that's really something we should basically more deal in the future there. Sorry, that's my last slide there. I just want to say, to illustrate one thing is, back in the 80s, at RMS, we were able to go to clients to install all our models with 17 diskettes. Clock in the computer at the time was fine. Now, if I see our model catalog today, I would need actually 600,000 diskettes. I cannot do that anymore, right? So you see, if we would say with the same technology today, we will never be able to develop the same science as we have today. So really, technology is just a simple illustration about how simple aspect of technology like computing power allow us to deliver better modeling. And so this is what I said, right? New technology, new opportunities in the way you better understand your risk, like flood modeling. Also a new innovative form of coverage, cyber risk, cargo marine. And this is something that will help you really to grow the industry. And of course, which is important, growing your business, it's important, but also especially growing and maintaining the relevance of our industry for the society, which is also a very important aspect of insurance business.